Hey everyone, welcome back to the channel. Today I'm going to be breaking down a trade I took yesterday on the 19th of July on Euro USD. It's a really fascinating trade because it's slightly more on the aggressive side, and fascinating, what I mean is to break down. And I think there's a lot of learnings that I took from it and maybe that you can take from it as well. And I just want to touch on and walk through the reasons that I took this trade, because actually the same narrative and trade idea did play out later in the day as well. So you could have got involved in the markets and still had relatively the same risk to reward. So I'm going to walk you through both, and then it'd be interesting to hear your thoughts as to which one you maybe would have taken or did take. And I don't think there's any wrong or right answer here. But for me, where I am currently in my journey, I'm learning more about smart money traps, and actually sometimes where it seems to be more aggressive is advantageous because it allows me to be in the market whilst order flow is switching on the bullish side and I'm not hitting that premium leg coming into the trade where price could take me out for a quick loss. And I'll explain what I mean by that later on in the video. But we'll start with some top-down analysis, and usually on the weekends I'll start monthly, weekly, but during the week what I'm looking really to do is just align that daily directional bias with 1 hour order flow. So I try and keep my charts relatively clutter free, as it were, and all I'm really looking at on screen here is what does the current price leg tell me on the daily. And I can see here that momentum is very much to the upside. I was seeing how price reacted to the current previous swing high here. So we've taken out previous daily, I think even weekly highs. I can't be sure without going on to the weekly, but a significant liquidity pool here. So how has price reacted on the daily here? Well, we have had a small reaction, but price hasn't swept that liquidity and pushed to the downside. We can see here, the following couple of days, we've got those engulfing candles, broken this high now, and we've closed with intent. So I'm seeing momentum still to the upside here until price tells me otherwise on the daily. So we've got this small area of value here, but we can see, or we can map out our areas of value now on the 1 hour a lot clearer. So if I just drop down to the 1 hour, I'll show you what I was looking at for the week here. So again, keeping it relatively simple here, I'm just looking at the decisional and the extreme. And what I mean by that is this leg from this low to this high, I'm seeing that as all as one move essentially, because we've broken this structural high here. This is the origin of the move, and this is the decisional. So whilst we've got that intraday activity, if that's the right terminology to use, where we're creating a higher high, higher low, higher high, actually this is the true swing low and the true swing high. So until we've broken this low, the 1 hour order flow is still bullish. So of course there may have been trade opportunities here. We've seen a small reaction, but then we've continued to push into the extreme. But currently, this is the week high that we're targeting because so far it's failed to take this low. So the narrative alongside the daily is still bullish. So we can just remove this decisional here, and then I'm looking for one thing and one thing only. So I'm not confusing myself and trying to look for counter trend trades here. I'm looking to see how now price reacts to this 1 hour order block, point of value, whatever you want to call it. I know there's a lot of different different names for it. So just going to drop down to the 5 minute here, and this is where I think it's really interesting. So I won't go through my entire trading strategy here, but a part of that is I'm wanting to see Asia lows taken and Asia highs. It's quite often a significant liquidity pool with which price will target. But once we sweep these lows here and we tap into this 1 hour order block, order flow is currently to the downside still. I'm not looking to get involved, gamble the account away and execute on positions here. And what we've actually done is we've built this large range. So I'm quite aware of this. And if I'm taking orders, ideally, I don't want to be taking longs in and around this area, pushing into this large volume where prices continue to the downside here. But we move lower into the extreme of that 1 hour order block. And then what do we see? We see a sweep of liquidity. We see this pin bar candle here. Price ranges a little bit, creating some volume. okay, and then it pushes, creating an internal market shift. External market shift will be here, which if you're ever unsure, look at the M15, and that will quite often tell you the swing points for the internal and the external market shift. Perhaps a video for another day, but where I've got the significant liquidity pool marked out here, this would be the external market shift. If you were looking to play it a little bit safer and see price create that external shift and then pull back. And as I said, there was a great trade opportunity later in the day for that. And if you're unsure what I mean, I'll just spend one more moment on this. But if we look at this here, okay, we just pull that to one side, okay. And we'll come back to the trade momentarily. Oh, I think I've already got it mapped out. Perfect. So if we look at this leg here, okay, we can see price is still very much in discount. It's creeped into the premium here, but this is where the volume kicked in to the downside. So I'm not wanting to take trades in and around this area because it could be what's known as a smart money trap. Essentially, you're jumping in once you've seen intent to the upside, but actually it's just pulling into the extreme premium to continue order flow to the downside here. So if price was in and around this area, I wouldn't have executed on this trade. So I was happy to be more aggressive, knowing we're still within discount. We've shown intent. We've had an internal market shift. This is where I can set my order on the sell to buy here. I could have been greedy and I could have got in with a 4 pip stop loss and just taken it from the volume and below these lows here. But actually, I'm happy to take a 5 pip stop loss. It's still an incredibly small stop loss, in my opinion. So we can see how the trade played out. If I just play price forward here, we can see price tags me in. Things aren't looking too good here, but I've backed the trade, backed the narrative. If I am correct, this is the low of the day, and we're at least going to tap into this premium, and this low is protected here. So I'm looking to see if price does push up, which if I play price forward again, we can see we then start to get that move to the upside, okay? And at this point, I think I've trailed below this low here. And as we start to approach this area, this is where I'm seeing how price reacts, and I'm moving my stops to break even. Okay, so we can see here, we don't get the reaction from here. So we're likely to target this liquidity at a minimum. And that's where I'm looking to take profit. So I think it was like 9.3 pips. I manually took the profit because we started to get these kind of wicks here. And then price comes back down to the entry. So those that know smart money principles will know quite often, because there has to be an equal amount of buyers and sellers in the market, big banks, institutions can't what's the word I'm looking for, execute on all of their orders at once. So they'll often pull price back into that entry here. Okay, so you could have taken it from this volume and got a re-entry, or this would have been the safer trade if you were more on the conservative side, because once we'd actually broken this high, this could be known as the external market shift, right? Okay, so now we've had that external market shift. We've swept the lows, we've swept Asia, we've had the external market shift, and we've got enough nice pullback into the entry here. And again, you could have targeted 2%, and I think you would have also got 2% out of that trade, if I'm correct. Let's have a look. Yeah, you would have. Now, even if the narrative isn't spot on, in both occasions there, we've either gotten aggressively within discount from the external market shift, or we've waited for the external market shift, we've got a corrective pullback into volume where price created that external market shift, the origin of the move. So both great plays, which mitigates some of the risk in taking these high value positions. Now, would I have taken this aggressive trade if we just swept Asia and we weren't, or we hadn't mitigated the extreme of a 1 hour order block? No, I wouldn't have. Okay, so this aggressive play has a time and a place. So that was the trade. Really, really happy with it. I could have also got involved in this one, but I'd had this marked as liquidity. So once this was swept, my mind shift was thinking that actually we may take this low now. So perhaps some learnings there for me to be on the ball and mark that as the external shift rather than the liquidity, and understand the play from a more conservative standpoint, and I maybe could have got another 2 out of the day. But overall, very, very happy with the trade. Let me know what you think of the trade in the comments, or if you got involved and how your week was. Really, really keen to hear. And if you enjoyed this breakdown, do let me know. Subscribe to the channel, like the video, comment, helps the channel grow, helps me out. I look forward to seeing you in the next one.